G'day guys, and welcome back to another episode of Breaking Down the Charts. I do apologize for missing last week's episode. There was quite a lot going on with our hosting facilities. We were looking to arrange some new hosting agreements which would be favorable for the long term, and I wasn't able to get out the episode during that week. However, we're back this week and there's been quite a lot happening. There's quite a lot going on with Bitcoin and Ethereum. There's been some volatility, mostly to the downside, to be honest, which we're going to go through in this episode today. And there's been quite a lot of pull-offs in some of the alts that we've been tracking along with. So important to obviously have strong hands in these types of times. You don't want to be kind of selling off just because there's been a pull off. That can sometimes be the worst thing. But at the same time, you also don't want to be holding on to what we call bad eggs and just holding them for the sake of, hoping that they'll come back eventually. So there's obviously some opportunities when these types of things happen. I've been picking up various types of coin. I have been caught out on a couple of positions, which I'm going to go through. However, none of them I'm feeling overly discomfortable with and I'm honestly looking to actually pick up a little bit more. We're going to go into ALEPH particularly, go into the three coins that we've kind of been, the altcoins that we've been trading, ALEPH, DIA, and Serum. Talk about the strategy that I'm implementing there. Everyone's strategy will be different, and we'll go into obviously LOKI compound and also Thorchain, which is something that I was looking at picking up as well. So let's jump straight into it. Let's have a look at Bitcoin. Obviously, what we've been tracking over these episodes is this kind of pitchfork. This helps me to kind of understand what layer that we're in, or whether we're in this lower trend line, middle trend line, or getting close to that regression line. And I've also obviously been having this Bitcoin production cost over the top as well, which basically shows the cost of producing one Bitcoin, or the rough estimation of the cost of producing one Bitcoin, including the hardware costs and the electricity costs, which is this yellow line. So in between this electricity and this line here is, hardware costs, transaction costs, infrastructure costs, and basically just having the basic tracking that, Bitcoin is pretty heavily undervalued, as it's costing more to produce Bitcoin than what the price is right now. So just to reiterate, there's obviously two things that are going to give way. Either one, we need to have a price increase so that, our Bitcoin miners can sell at profit and for it all to make fundamental sense, or for the number of miners to drop off on the network. So we need the network hash rate to drop down, making it more profitable for the miners that remain on the network. Now, if we just have a look at that, if we go into Bitcoin network hash rate and just have a look at what that looks like in our good website, blockchain.com. As we can see, that second scenario is clearly not happening. The network hash rate is just escalating and going up and up and up and up and up. So the reason I believe this is because the miners are looking at this long term. They're not really interested in selling Bitcoin at the current price, even though, it is costing them a little bit more to produce. They're looking for things to really, really take off in this next Bitcoin halving cycle. And we've looked at that Bitcoin halving cycle before. If I get this image up, Bitcoin halving cycle, this one here will be fine. Although there's a better one, I prefer to use this one. This one will do. If we go on, here it is here. So as you can kind of see that Bitcoin, between the halvening, which are these horizontal lines here, Bitcoin tends to have these like classic cycles. It has this exponential growth cycle, which is the blue area, followed by a strong decline, which is this kind of yellowy brown area. And then it gets an accumulation phase, which is this red box, another accumulation phase, and then, another expansion phase followed by a long accumulation, and then it absolutely takes off again. Okay, so we're kind of in this territory here right now, where we're in that kind of expansion phase again. And if we have a look at the charts and have a look at what they kind of look like, they're kind of replicating exactly that. Look, it looks kind of, like we've had that long accumulation or even downtrend accumulation phase here, and now this is the recent Bitcoin halving, and now we're looking to kind of take off again. So that's the overall. A lot of people are messaging me saying, oh, should I buy more Bitcoin? Should I hold it? Should I sell it? Wait for it to drop? Buy back more. Honestly, I'm not overcomplicating my trading strategy. I'm very much so in a creative phase for acquiring as much Bitcoin and Ethereum as I can. I am holding a large amount of Bitcoin and Ethereum, and basically what I'm looking to do is invest some of that Bitcoin and Ethereum into smaller projects here and there. Only maybe 1 or 2% of my portfolio goes into these smaller projects like Serum, like DIA, like ALEPH, and basically looking to buy into these projects and then sell out at a higher multiple and sell back into Bitcoin and Ethereum. Okay. So that's the overall strategy that I'm following, putting into perspective that, the Bitcoin halving cycle, I believe we're in this expansion phase. So as long as I kind of keep acquiring as much Bitcoin and Ethereum as I can, I'm looking to sell off, closer to where we get to that fair valuation up here, maybe 15 or even 25,000 US dollars, where the miners are actually in profit. Now, just tying that back to the Bitcoin network hash rate, as you can see, the fact that the miners are just continuing to implement more and more miners on the network, it kind of shows us that they have that confidence that in the long term, Bitcoin is going to reach these prices. They're going to be very profitable as miners, and they're going to be already set up with huge, massive mining farms. And everyone else is going to start going, oh, now it's profitable to mine Bitcoin and trying to acquire these miners at ridiculous prices, and they're just not going to be able to get them. There's not going to be supply. So that's the kind of theory that I've got going, as relating it back, relating Bitcoin, the actual miners, back to the price of Bitcoin, and trying to fundamentally understand where the price should go, and what's going to give way or not. Okay. Moving on to Ethereum, let's have a look into Ethereum here. So as you can see, we've obviously had a bit of a pullback over the past kind of week or two. Ethereum's come back down to this level at around the 326, still above that 300 US dollar mark, which is great. It took a lot of volume to kind of break through on that 300 USD mark. I think, as you can see, I mean, it had a massive run ever since that kind of start of the year with the COVID-19, spreading through global markets, and the impacts of that. We've had a really, really good run, and obviously I think it was just a little bit overdue, to have a nice pullback, to be quite honest. I mean, there's a lot of people out there saying, oh, Bitcoin really needs to, sorry, Ethereum needs to really keep running up. But to be honest, I strongly believe this is a fairly healthy pullback, in my personal opinion. What I am looking at here is I am looking at these moving average lines, and you can put these moving average lines by heading into the indicators. If you type in moving average, and then you can scroll down to multiple moving averages, select multiple moving averages, and then basically what you can do is you have it in here, moving average multiple. You can click the settings button, and you can put in different types of moving averages and change the color for them. So I've got purple as the 20, I've got 50 as the green, and I've got orange as the 100. Okay, so at the moment we're tracking between the 50 and the 100-day moving average. I do think it's possible that we'll come back down and kind of test this 100-day moving average. The RSI at the moment is fairly low though, so I'm not quite sure that we will actually touch that bottom market around the 324. But what I'm basically looking for is for things to start heading back up right now and test this 50-day moving average. I'd really like to break through that 50-day moving average and continue this kind of upward trend. If we get a pitchfork out as well, looking, we won't we won't put a pitchfork on this one actually. But overall, I just think that, yeah, if we can hold this 100-day moving average, that's what my eyes are on mostly at the moment, and looking to kind of break that 50-day moving average as well. Okay. I did buy quite a large amount of Ethereum on this major pullback, to be honest, and I've been holding that. It was up as high as about 20%, and I did cash some of it out to US dollars, US Tether, sorry, which I'll then use to put into these smaller cap coins. And I have today just bought a whole heap of ALEPH again. I bought about 10 Ethereum worth of ALEPH down at this lower prices, and I'm going to go into what I'm doing with that ALEPH later. But basically, I did quite well on that trade there. Sold out for a US Tether up here, and now I've kind of used that US Tether today, put it back into the market. I feel like it left at a really nice low at the moment, and I'm keen to pick some up there. I'll jump into that because I'm actually staking a left, and I'll jump into that in just a second. But yeah, overall, just holding that Ethereum now, basically for the longer term, waiting to kind of get into the Ethereum 2.0. We've had the test nets going, which has been really great. Great to see that the project is striving faster and faster to push towards getting 2.0 release, which will move it away from proof of work and onto proof of stake. And as we've mentioned in plenty of the episodes previously, we'll see a large amount of the supply being locked up on the market. And as we know, a reduction in supply or available supply, or circulating supply, so to speak, usually leads to a price increase. So quite bullish on Ethereum. Happy to pick up at this price. I thought it was very undervalued here, and as you can see, it's kind of taken off, pulled back a bit, but overall, I think we're looking to push up to this 50-day moving average and hopefully break through. I do not think that we'll break this 300 US mark. And if we do, then I may start implementing some hedging strategies. But overall, unless we kind of break that 100-day moving average and head towards the 300 USD mark, I'm pretty much going to be holding this till after 2.0 staking comes up, and I may even lock up most of my Ethereum in 32 lots once 2.0 does come. Moving on to Digibyte. So Digibyte, we actually in one of the previous episodes mentioned that it could be a good opportunity to buy at the bottom of this ascending wedge, and unfortunately, it did actually break through. So some of our community was holding this trade for quite a bit. Pretty much everyone had really strong hands. Most of the guys are mining Digibyte as well, so we've been accumulating quite a bit of Digibyte. And just yesterday, a lot of the guys sold up at around about this. Everyone had their sell orders at about the 280 to 300. Satoshi mark. So some of the guys got it at about this chart doesn't show that it got to 300, but I'm pretty sure on some exchanges it got to about 306, and a lot of the guys sold kind of between 290 and 300. So pick to the top there, guys. Really, really good stuff. Really great to see you guys all putting some trading strategies together. A lot of the guys actually had a little bit of a trading strategy where they picked up that Digibyte and Loki tend to have kind of the opposite reactions, and so they sold off their Digibyte up here and put it into Loki. And as you can see, that was a really great trade. Now Loki's kind of doing the opposite and starting to head up. So I think Jules was kind of the ringleader for that one. So really good stuff there, Jules. Great to see people implementing these types of strategies, looking at correlations in the market and taking the best of both worlds there. So that was really, really great. I personally sold quite a bit of Digibyte as well, holding on to a large amount of it as well. I'm looking for kind of the longer term projection. Once Bitcoin really takes off and this market really kicks off, I'm kind of looking for these multiples up here, to be honest, in between the 300 Satoshi and 450 Satoshi before I start clipping out. But I must admit, it has been harder to break out of this ascending wedge than what I was hoping. I was kind of hoping that back here that we would start to break through, and we haven't. So yeah, not a bad price at all, selling anywhere around the 300 Satoshi, and I did offload some of mine there as well, along with the rest of the community. So that was really great to see. Moving on to Loki, obviously we have had quite a substantial pullback, but we do seem to find the floor on the bottom of this pitchfork that we've had implemented for quite some time. So I do quite like picking up Loki down here. As I mentioned, a lot of people sold off Digibyte and bought up some Loki. We've had a lot of people locking up their nodes recently as well. A lot of the newer guys coming into Mining Store obviously see that a lot of the Mining Store guys have at least maybe a quarter node, or most of the guys are getting to a full node now. So we've had quite a lot of people locking up Loki for the longer term. Just to reiterate, I think I've mentioned it a couple of times, but my strategy for Loki is a bit more of a longer term strategy. I'm pretty much happy locking up and keeping my Loki locked up as long as I'm earning around above 10% interest per year. And I'm looking to sell my Loki when Loki gets to more of around about $1 US stable. So right now, let's have a look where we are. And by stable, I'll show you what I mean. So obviously we did pump up all the way to $1 US, and I did sell a lot of my yielded coins up at this price, which was really, really good. But ultimately, I didn't unlock my nodes. To be honest, I have quite a few nodes with Loki, and basically, I'm not going to unlock those nodes until we get stable price, like we see here. This is stable price action for some time at around that $1 US. We're tracking it along at a stable price there, and/or the interest on the nodes falls below 10% per year. Then I'll look to kind of unlock my nodes and start selling them off. But earning 20% per year with a project that I think has a long-term value to go up and get capital gains, I think it's a really good strategy to stick in there and not worry about trading it too much. I do trade my yields, as I mentioned, so I sold a lot of them, pretty much all of my yields off up at these $1 mark, which was really awesome. Cashed in quite a lot there, but overall just kind of holding those that Loki for the long term, to be honest. Okay. Going into Serum, not really much to report, to be honest. I'm just holding this Serum. I do think this is one of those projects that in the long term will do quite well. Once we really start to see some coins listed on the decentralized exchange, such as ALEPH, which we'll talk about in a second as well, I do think Serum was going to do quite well. So personally, I'm just holding this one. I think I picked it up pretty earlier days back here at around about $1. 95. I can't actually quite remember. I I think I picked it up around this price here, or pretty much the price that we're at now, or pretty close to. So I'm not really in any rush to kind of sell off or cash in or anything like that. I'm kind of just holding this one for the long term and see how Serum will go. DIA I actually sold completely out of. I thought, and it's nothing against DIA to be honest, although it did tend out to be the right move. I sold it about $2.65, I believe, or $2.50 around this mark here. And it's not because I didn't like DIA, but it was because there was a bigger price action on the downside on ALEPH, and both of those were my higher risk trades, to be honest. And I decided to sell out of all the DIA they had and take advantage of the low prices on ALEPH. Also, ALEPH implemented staking ability where you can get about 19% at the moment interest on ALEPH, which I'll go through right now. And so I basically sold out of my DI position and stacked into ALEPH, and that way I don't have to kind of focus on two projects so much, and I can keep my attention on one. So I've been saying a few times in this episode that we're going to go into left, so let's go into it and explain kind of what's happened, why we've had this drastic pullback, and why I'm still buying up down at these low prices here. So basically, what has happened, with the left, there's probably 6 or 8 really large holders of this coin, early seed investment level investors, and they basically had been holding their left during this price action. One of them, it looks like, based on kind of backchain analysis, we're able to look into the wallets. It looks like one of them sold out quite a lot of their bag, and further kind of digging into this, the reason for that, it looks like he had to cover some of his larger trades on his, obviously a full-time trader, and had to cover some of his larger positions, and unfortunately he got himself in a bit of a margin position and had to sell out of his ALEPH. So it wasn't necessarily because he didn't like the ALEPH project, he literally just had to, it was a bit of a liquidity pinch for him, and he sold out a really large amount. So six, as I said, there's about 8 large holders. 6 out of those 8 have been still picking up ALEPH. They haven't really been selling off. And unfortunately, sometimes with these lower cap illiquid coins, when one person has a huge amount and they sell, it can cause this massive runoff. So that's pretty much what has caused this massive runoff. It has been really good to obviously again look into that backchain analysis and see that those other 6 out of about 8 of those larger holders have been holding or acquiring even more ALEPH, which is really good. Based on the research that we've done as a group in the back end at Mining Store, it looks like most of the bigger players who are behind ALEPH, including FTX, have picked up their ALEPH maybe between about 20 to 30 cents. So they're still kind of in the negative, and we would assume that they want to kind of see this project do well. There has been a large push in the recent days or weeks to get a lot of the money off of exchanges like Uniswap, which are decentralized exchanges, and pushing it onto more centralized exchanges like Qcoin in order for some better market making actions to be taken. So it's a bit easier to kind of control the price of a coin when it's on a central exchange. And so there has been a large amount of pressure being put on ALEPH as a team to get the coins onto a more centralized exchange. And we've seen that happen. They've kind of teed up with Qcoin, and Qcoin pretty much were offering at the start 54% for if there's only 0 to 2 million coins staked up. At the moment, there's between 4 million and 6 million coins staked at the moment, and you're earning about 90% interest. I just locked up a whole bunch of ALEPH just before, and it quoted me at about 19% interest. The more people that lock up, obviously, the less and less and less you start earning per year, but nevertheless, it's better than earning nothing. And as I say, this is a good incentive to kind of get coins onto a centralized exchange where better market making material can take place. So overall, with the players that are involved with ALEPH, including FTX, and I strongly believe that these players picked up at around 20 to 30 cents. If you again look at the backchain analysis and look into the wallets, I do believe that there is some potential upside for ALEPH, and it should recover. And so I've put a lot of my riskier assets into ALEPH, and I've actually picked up a whole bunch more today at around this 17 cents mark. I think I pushed up the price to about 19 or so cents. and then I'm going to lock it up under this staking, and then hopefully around 18 to 10% per year for across the next couple of months until it kind of recovers to these higher multiples where I can sell some of that out. So a lot of the LF that I picked up was between probably 30 and 40 cents, and so I'm basically looking to I've almost doubled my position down here, and I'll look to kind of sell some off closer to there, and break even on this downside that's happened. So that's what I've done. It's not for everyone. Obviously, it is a higher risk strategy, pretty much what we call a martingale strategy. But as I say, this is not. It's not like I'm putting 80% of my portfolio in this. This is 3 to 5% now of my portfolio. I've taken out 1% from here, 1% from here, and basically put more into here. And I've taken out some of my Ethereum holdings as well. So probably got a decent amount for a low risk coin in this project now. But when things go, it's not all the time everything goes your way, and sometimes you've got to formulate a strategy to get out of a position that you're in, or make the most of it as well. So when price comes down, a lot of people can go, oh no, my investment hasn't gone well, but they're blinded by the fact that there's also opportunity there to pick up at a much lower price than what you originally picked up the coin at. And as long as the coin is fundamentally, or from your research, you feel the coin is fundamentally not flawed, it can be the right decision to do that, pick it up on a discount. So hopefully that gave you guys a bit of an insight on LF. I'm never really stressed out. People sometimes message and go, oh, are you worried about ALEPH? And I kind of go, or are you worried about this coin? I go, no, why would I be worried when it's only 3 or 5% of my portfolio? That's exactly what these coins are. They're newer coins. They're much more higher risk coins, and you shouldn't be risking too much on them. But nevertheless, you can still formulate great strategies and make great multiples on them if you trade them properly. Okay, so that's basically what I've done with ALEPH. I'm putting all of my coins onto KuCoin, getting that staking benefit, holding it for the long term, and I've kind of doubled down my positions down at these lows. All right. Moving on, and we'll wrap things up pretty quickly now. Compound, unfortunately, it fell out of this lower level trend line that I've been tracking. I did manage to sell some of it off as we kind of broke it across this moving average line here. I believe it was the 50-day moving average, the grey one. Yep, on the 50-day moving average, when we broke that, I did sell some of them off. I'm also holding some. I don't think that we're going to break lower than this 122 mark, and it could be an opportunity for people to pick some up if they're interested. However, obviously, pick some up at your own risk, and if you're already spread across too many coins, then don't. But it is potentially an opportunity to do so. I'm probably going to look to kind of hang out until we get closer up to these 0.618 fib line around the 260 or 320 mark is where I'll look to sell off my compound. But again, just happy to hold it as a smaller portion of my portfolio until we reach those levels. Thorchain, probably not going to tap onto too much with Thorchain today. However, there was some issues with CZ from Binance. You guys can have a look into that. I'm not going to go into the full story today. But nevertheless, I think Thorchain's a pretty cool coin. They've got a really good team, Melbourne-based project. I think they can do like some pretty big multiples in the future. So, when these bad news happens, again, if the project's not fundamentally forward, we're sitting on a very long moving average line here. Let me just double check exactly which one it is. I believe it's the 200. Yep, the 200-day moving average. We're sitting right on that 200-day moving average, and we've been above it for quite some time now. So I would think if you're interested in picking up some RUNE or Thorchain, then I definitely think that this is kind of a good price to do so. I'll try and get a bit more of a breakdown of what exactly happened with CZ, sorry, and give a bit of a rundown on the next episode. But I think this episode's probably gone for long enough now. Again, sorry for missing last week's episode, but nevertheless, I hope you guys are trading well out there. It's pretty much just a holding strategy on the bigger, what we call parent assets at the moment, and pretty much trying to cull down some of your smaller assets and put them more into one basket. For me, it's ALEPH, and then holding that with some staking benefits, and until we get to those higher multiples. All the best, guys. Happy trading. Make sure you're getting the Mining Sword Discord. It's been absolutely pumping. Even I've been struggling to keep up with it myself, but there's been some awesome intel flow coming through there. Some great trading strategies being released, and really good just overall community engagement, which has been great. If you have any questions, there's a link in the description for a 7-day free trial. Just jump in there, meet everyone. If it's not for you, you don't have to stay hanging around. But I think there's a lot of value to get out of there. All the best, guys. Have a great week, and we'll catch you on the next one. Bye.